Well, this update really shouldn't take too long, I guess, because the first thing to do is to congratulate everybody on successfully teleporting back in time to 2019 and being able to replicate the sort of stagnant, stale, dog shit price action that we had back then. So right now the markets are pretty much just locked in utter shitsville. We get zero action on BTC. The volatility is dried up. Volume is all-time lows. Everybody in the world just seems as though they're enjoying their summer while we're all stuck glued to the screen, unable to take our eyes off the 5-minute chart while everybody else is making hideous amounts of money on chain trading. And that's pretty much the summary of where we are right now. The price action when it comes to everything that resides in this watch list is trash. There are some outlying markets that we have right now which are interesting, but the majority of the action is really taking place, on chain, and is taking place on some of the newer chains that are popping up as well. And we're starting to see and keep on referring to them as meme coins. You phrase them however you want to; it doesn't really matter. But that's where all of the action is kind of taking place right now, and it makes sense. Participant numbers seem to be pretty much at all-time lows as well. We know that about the inflow of new money is non-existent, and therefore it makes sense that we're kind of gravitating towards some of these other areas of the market in order to seek out the value. And that really is kind of the theme of what we've been discussing a lot. Number one, in the Haven over the course of the last week, and also from myself in more of kind of a public Twitter perspective, is you have to be able to adapt and change in order to make money in the current market environment. And that is the key point here. So a lot of people who have been used to trading, everything that, like I said, resides in this watch list and really are the popular pairs it's been poor. It's been a difficult trading experience. A lot of the times it's felt as though we're round tripping more than kind of ever before. The round trip numbers, I'm sure, for a lot of you are sky high. You have trades that are very successful, you hold on to them, and then within a few hours you're back down at break even or underwater or stopped out in the worst case scenarios. And I think that yesterday as well was a very, very good example of that. When we saw the price action on BTC, looked as though we got a nice clean breakout here into the afternoon, just to immediately wipe that out into our 2 hourly candles through this region here. So the market right now, very difficult to trade. I don't think you should beat yourself up if you're not trading this. I think, however, you should be considering how you adapt in terms of the market conditions. And there are a couple of ways of doing that. So number one is you just ignore this shit altogether and you just start, kind of diving more into the on-chain side of things. And instead of putting in the time and staring at these charts, you're instead putting in the time and you're researching and getting into your Telegram groups and your Discord groups, and you're browsing Twitter and you're searching, right? And you're putting your time and energy into the seeking out of the next hot thing, or you're adapting your trading style. I think that's what you have to do through this region. I don't think there's any other way you can get around the current market environment without adapting in some form. So from my perspective, I'm trying to trade this stuff less. I'm trying to do more kind of on-chain, but that's the adaptation that you need to make. We'll give a little bit of a summary now of some of the stuff in this watch list and kind of discuss the boredom aspect a little bit more, because that's also going to be killing people in terms of, account value and what they're doing on a trading perspective. And very often the market is going to push you to the brink of submission before it finally puts in the move that you've been dying for the last month anyway. And so we'll discuss that in a little bit more detail with some of the price action that we have in here. BTC at the moment is just trapped in this range, and this is what I mean about 2019. This sort of, $100 range that we've got on BTC, which has actually lasted for a significant length of time now, kind of this 5-day period, is very reminiscent of the price action that we have had historically on BTC during these lower volatility areas. Now, you can put that down to the fact it's summer and everybody else has a life, or you can put that down to the fact that there's no real interest in this market right now. And especially with stocks performing so well in general, then this market is, just a little bit quieter than everything else. So, this is basically the boundaries in which you're working towards on BTC right now. And unfortunately, the market has also made it very difficult within these regions because the moves have been quite aggressive and have shaken people out, even though the dollar value is not a huge amount. But we'll discuss some of the reasons for that in a second. So yesterday we saw the move and looked as though we were getting the breakout and we were going to get some impulse up this side of the chart, only for BTC to, like I said before, give all that back in 2 hourly candles through this region, take out the bottom again, and now back inside this wonderful little $100 range that we find ourselves in. There's no real point in over-analyzing this market too much. I think that the most important thing from this is that volatility is low, volume is all-time lows, and there's no real interest in the market. Now, historically speaking, whenever we get to that situation, there tends to be a significant move in the market. There tends to be a pop-up in the market that we get that shocks everybody back into life, basically draws the interest back into trading, will probably freeze you out of the move because it will go quite aggressively. Direction, unsure about on which way we're going to go with that. But we know that, like I said, historically speaking, there tends to be a shock point for the market that will drive us out of this region that we're currently locked in. And that's what we'd be looking for. And especially, again, with action and attention really all in other places, it's a good environment as a whole for some sort of move like that. Are we going to get it with the sort of, participation that we currently have and the interest that we currently have? Who knows? Who knows what event's going to come up that will maybe give us some kind of, action and life in this market? Key points being adapt, adapt, adapt. You have to be able to change and adapt to what we're seeing currently. And with the caveat that, like I said, historically speaking, there tends to be a move that we see. Now, what happens during these areas and these prolonged periods of chop and consolidation and back and forth action, and really playing into the tweet that I sent earlier this week, is that you look at a chart like BTC, and especially from the start of the year, and you think, well, this is a nice trending market in terms of the fact that we're, moving to the upside. We're basically up 2x off the lows, and everybody should be happy. The situation should be good here. We should... everybody should be up a lot. Everybody's just buying spot anyway, and so they're going to feel great about this, and, we're all happy. The reality of that is very, very different based on the price action that we've had outside of the very limited time movements in which this market trends cleanly. Okay, so looking back historically over like trending moves like this on BTC, and even the second leg up that we had to the fresh all-time highs through here, it's a far cleaner trend than this is. So you can already see, even just from this super zoomed out view here, that the actual price action, the length of these corrections and consolidations and periods of chop have been far greater than they are in these kind of cleaner trending scenarios that we get through here. So this move, especially the 2020-2021 move, very clean, very short periods of consolidation, and then very aggressive moves back. This period here, basically exactly the same. Once these trends develop, like this area through here in October, it provides us with some very green days back to back to back. This area of price action, very different. Okay, so these areas of price action, they are very different in terms of the length of time that they're taking in order to play out. We're talking like 50 days through this region here. And we're talking about lots of back and forth all the way through these zones as well. So where we're trading, basically wicks on both sides, we're getting a very strong green day, followed by a very strong red day, followed by a very strong green day. Just look at like the price action in here. Like these candles in here. At the start of June. Price action like this, that is very, very difficult for people to be trading, very difficult for people to be holding positions. And also what it does is it tends to increase anticipation of those larger moves, but at the same time, whilst getting chopped to pieces. It's the kind of classic death by 1,000 cuts trading regions where it's really difficult to hold on to those positions and certainly do those big directional positions. So even though we know the market has been trending up, the actual periods of clean trend have been very, very limited. And we can basically count on two hands the number of clean trending days that we've had. The area through March here, over the course of 1 week, and the area here through mid-June over the course of sort of 5 days. And that's it. Everything else has been slow, difficult to trade, choppy. So what's happening again on BTC here is basically exactly the same as we've seen during these patches here, basically from April to June and from February into March. And we are chopping back and forth, so the lower time frame is very difficult to trade. But underlying that, we know that there should be a big move in this. There should be a move that's going to either expand us out of this or is going to pop to the downside, and therefore, kind of is going to provide the action on the short side of things. The longer these periods of time go on, the more you're likely to overtrade them. And it sounds weird to kind of phrase it in that way, but that is really the reality and the truth of it. So the fact that these trading ranges go on for a longer period of time usually means that you begin trading more as they go on. And the reason for that is really because of the anticipation growing of the move that is going to develop. So when we haven't had action for a week, it's like, fine, right, we're chopping, don't worry too much about it. When we haven't had action for 3 weeks, you suddenly start to turn into, shit, the move is coming soon, and there's been so little value in this market that I really want to make sure I capture the next pop-up on BTC, right, or the next sell-off on BTC. I really want to make sure I capture that volatility event because I've had no action on this market during, the last 3 weeks. So it tends to be the longer these periods go on, the more likely you are to begin that kind of over anticipation and over trading of the trading ranges themselves. The other thing that happens is you begin to get bored. So you either are going to be over trading this or you're going to get bored and you're going to switch off entirely. And either one of those scenarios usually results in the fact that you'll miss that volatility event. So you'll either chop yourself to pieces, you'll be so frustrated and pissed off with the entire scenario that you'll just say, fuck this, I'm done. Or you will just switch off in terms of the boredom because you've tried 15 times before to try and catch a trade. None of them have been successful. And therefore, by the time the 16th happens, and that's when you get the big 10% move, you've already given up on the price action. So it's really important that if you are trading these markets and you want to stay trading these markets without shifting elsewhere, keep up your attention, acknowledge the scenario that we're currently in, wait for that volatility event, and then play into it. So you have to show some discipline in between the moments of time that are difficult to trade if you're not a lower time frame trader engaging in those short-term moves. You have to try and maintain your focus and your discipline through those areas in order to capture that volatility event when and if it finally takes place. And the price action that we see right now is really, kind of not conducive to a strong attention span. What we see at the moment is obviously trapped between our two levels here and here. We see the fact that we are trading now down to the bottom of this level, and we've tried to have an attempted breakout of the top, and we're caught back between, I think this resistance is probably a better one on the lower time frame here. It's caught back below this resistance. It's very difficult to kind of maintain focus through these areas. But that's what you need to do in order to be able to capture the move. Otherwise, you're just going to switch off. You're going to get bored. You're either going to be over trading it. That's the other consequence of these ranges. And so discipline and attention to the market still, even though it's very difficult to do through a period of time. I'm not acting like, you've got to be some saint and it's going to be easy to do. It's very challenging to do. And of course, you're going to have your own, requirements for what constitutes any sort of breakout that's actionable for you. For a lot of people yesterday, this breakout here would have been a very actionable setup, and unfortunately just fails. So you need to also have, kind of those requirements for you personally and whatever your trading approach and system is in terms of how you can take advantage of when a volatility event happens and how you can capture the value. For the majority of people, it's got to be short-term profit taking. That's got to be the main thing that you're going to be doing through these regions. Because Otherwise, you're just going to chop yourself to pieces round trip every trade. But actually, if you can capture and you can be more aggressive in terms of your taking profit points, you're probably going to do a lot better through these regions. Certainly in terms of lower time frame profit, or at least coming out of this patch of time being able to show a green account versus somebody that's been, just chopped to shit. Overall market conditions, like we said before, there are some areas that are interesting. GameFi appears to be the most interesting area. Kind of started off with the YGG side of things in terms of the aggression that we saw on the move there. We saw MC move very heavily yesterday. Ape is in a very good position when it comes to the 3-day divergence, so Ape is still looking pretty tasty. We've seen some other things like Gods and GOG doing very well today. GameFi as a whole seems to have, kind of the interest right now in terms of a lot of these tokens are available to trade on centralized exchanges, and so you don't need to kind of just be doing the DEX side of things in order to access these. A lot of these are available, and it seems to be the one available area that seems to have the most interest and kind of momentum to the upside. It's certainly been producing the best returns for the last week or so. Ape has been a significant outlier from a majors perspective over the course of the last week in the strength that it's shown and the resiliency in front of any BTC corrections. Ape has actually done very well during those patches of time. I think Sol is also at an interesting point through here, because Sol had a very good recovery yesterday, pushing into the fresh high that we saw into the early hours this morning, and it was one of the only markets that managed to do that in terms of this is the reaction area that we saw on BTC with those 2 hourly candles that I've referenced. And we saw Sol perform very, very well on the back of that and push into fresh highs through here. So Sol is still a market that actually looks very good in the wake of what we saw, and it was a market that showed a lot of strength overnight. And yes, we've seen a correction again this morning, but still overall higher time frame market. I think Sol actually did a very good job yesterday. I think it had a good close. I think it finally popped above this little resistance point here at the 2490s. It was a good 12-hour close for it as well. And now we'd be looking for Sol to at least try and challenge through this region up into the 2630s, I think, through here, and take out this little patch that we've got here on the left-hand side from end of July. So we'll summarize a little here. The market overall flat. It's dog shit. It's very difficult to trade. You shouldn't be beating yourself up if you're struggling to trade. Certainly the major pairs through here, it is a very challenging period of time for the majority of traders. So don't beat yourself up if you're struggling. However, you do need to adapt and you do need to change. So you can either adapt by changing your trading style and ensure that you are reacting to the way the market conditions are currently set out, or you can adapt by moving entirely into a different area that has significantly more value, and that would be basically the on-chain stuff that's taking place at the moment. So that has significantly more value. Yes, you might need to pick up a new set of skills. Yes, you may need to research and do some additional time at a PC in order to kind of get on top of that side of things. But that's where the value is. And those people that have turned to that side have had a very successful, couple of months or so while that side has been popping off. The other thing that you have to do is you have to kind of remain very focused if you're only choosing to trade on centralized exchanges, or you want to be trading kind of a more majors driven watch list, is you need to be very aware of kind of the areas of the market that are performing well. So anybody that's kind of using spaghetti charts, or anybody that can see those market sectors and see the way that they are independently performing, you need to be aware of those rotations or areas of greater value than the market in general for these periods of time. So we can see that right now, obviously, like the gaming areas, GameFi tends to be and has been doing very well over the course of the last week. There seems to be more value and opportunity in that market area than there is in any other. So some things that you can do during this period of time, but what is a slow area for the majority of traders using traditional watch lists. And it requires adaptation, it requires change, and it requires discipline in order to not get cut to pieces and suffer through a period of time in which the market is unforgiving and is making you, it's like trying to draw blood from a stone in terms of what you're trying to get in terms of value through these regions. So we have to adapt, we have to change. Otherwise, it's looking like a pretty shitty summer.